buying good companies at good prices is very easy to say, but it's not so easy to implement in a very strict manner. And we believe that our professional experience helps us doing that. Second, we are currently the largest investors in the fund, so we are completely aligned with the rest of the investors in the fund. Third, we are managing one fund, so we are concentrated all our efforts in managing one fund versus having different vehicles. Fourth, we have currently a limited size, so we are investing currently 60 million euros, and we think that this is an advantage. I mean, we obviously want to grow more, but even if we grow more, we think that size is an advantage because it allows us to invest in any company and to enter and exit any company without any problem. And then finally, we are an independent firm, so we are owned by the employees, by my partner and myself, who are the owners of the fund. So having talked a little, well, and finally talking about the returns, I mean, we launched the fund 5 years ago. We are still young firm, but for us, 5 years is the minimum time period for investing in our fund, and so far the results are encouraging. So we are clearly outperforming the market. The annualized return in these 5 years have been around 6.5 years. I've seen 6.5% annually versus 4% of the market. Okay, so once I've talked a little bit about Equam, let's talk about our investment idea today. I'm presenting smart metering systems, and this is a UK company. Well, it's a UK company because basically we are now finding a lot of value in the UK. We like to go where there is fear and where there is pessimism. And we believe that Brexit is creating too much pessimism, and that there are many very attractive and nice companies with very strong businesses that, independently of what happens in the Brexit situation, the business will not be affected at all by that. And Smart Metering Systems is one of these companies. This is a Glasgow-based company with a market cap of around £500 million. The company was created in 1985 as a service provider for utility companies, but it has transformed itself to a company which is currently installing and managing smart meters on behalf of utility companies. The company has around 700 employees, of which 500 are engineers, and the numbers of 2018 was 90 million revenues and 50 million EBITDA. If you look to the share price graph, so we can see that very recently the company has suffered a very strong derating, and we believe that this has created a very attractive opportunity to invest in this company, and we will explain now why. Okay, so as I said, the company is basically installing and managing smart meters. It has currently 3 different divisions. The first one is the installation business division, which basically what they do is they have, as I mentioned before, around 500 engineers, which are basically installing smart meters on behalf of the utility companies. They do it for their internal purposes to install their own meters, but they also sometimes work for third parties. So when they work for third parties, that's shown on the installation business unit. By the way, the numbers there, sorry, it is a mistake, it's the other way around. So the numbers for asset installation corresponds to asset management, and the other way around. So asset installations is basically around £25 million revenues with an EBITDA of 6 million. Then we have the asset management division, which basically is the division that owns the meters that have been installed on behalf of the utility companies, and as we will explain now, which are creating a recurring revenue for the company. And finally, there is this company is generating currently around 65 million revenues, and the EBITDA is around 60 million. Basically, there is no cost on maintaining the smart meter, so all the revenues goes directly into cash. And finally, there is another smaller division, which is the energy management division, which basically is a consulting business where the company is offering services to mainly industrial and commercial clients regarding their energy consumption. Okay, this is a small division. It's generating 6.5 million revenues with an EBITDA of around 1.4 million. Okay, so let's talk a little bit about the smart meters. What are these and why are these so attractive? So basically, a smart meter is a meter which is automatically sending information regarding energy and gas consumption to the utility provider and also to the end customer. Okay, versus obviously the traditional meter where there was somebody who had to go to the homes or to the factory and to make the read of the meter. Okay, some years ago, the UK government forced all utility providers to make a transition from the traditional meters to the smart meters. Okay, and this has already started for some years, and there was an initial deadline to finish all this transition by 2020. As we will explain afterwards, this has been postponed recently until 2024. The reason to do this transition basically is to save on energy consumption, to allow consumers to have a better knowledge about how much they are consuming, and also for utility companies to offer the more adequate rates and contract to each specific customer depending on how their consumption is. So how does the smart meters contract work for smart metering? So basically, smart metering is installing one meter, and there is two main components of the cost for a smart meter of installing this smart meter. One of them is the meter itself, the device, and in that case, the company is investing around 200 to 200 pounds per meter. Here we are talking about dual meters, so this is a meter which includes both for energy and gas. So if you take only one of them, it would be half of that. And then, so 200 pounds for each device, and then you have 150 pounds, which is the installation cost that a smart meter is incurring in for installing that meter. For that investment, the smart metering is currently receiving an 11% yield for all the time of the life of the smart meter. Several things to mention here. First, that this is an inflation-linked contract, so any inflation will be automatically transferred to the annual rent that smart metering is receiving every year. This is a contract that lasts for as long as the smart meter is lasting, and the company is currently amortizing these smart meters around 25 years, but the real life of this asset is much longer. Especially because these are smart meters, so any technological change that might occur, you can do that automatically through software without having to change the smart meter. And finally, the final interesting characteristic of the smart meters is that the company is protected by termination fee. So first thing, I mean, who is paying this annual rent? It's not the utility company, but it's the end customer. And in any case, if the end customer decides to move from one utility company to another utility company, the new utility company has no incentive at all to change the smart meter because it's installed there already. So if they want to change the smart meter provider, they would have to pay for that meter which is installed there and have another one installed. So for the utility company, the easiest thing is to stay with the smart meter that has already been installed. Should they, for whatever reason, decide to change that meter, then they would have to pay a termination fee to a smart meter. Okay, so this is what is a smart meter. Basically, let's look now to how does the market look like. So first of all, utility market in the UK. We have 75% of the market, which is covered by 6 big utility companies, and 25% of the market, which is covered by the new incumbent independent utility companies, which are basically small companies, which are very asset light, with few people, and which are basically only commercializing energy or gas for the end customers. Regarding the smart meters, how does this work for the different players? Well, in the case of the big 6 utility companies, normally they do it themselves. Why? Because they have, first, the financing resources to do so, and secondly, they have the internal installation capacities or capabilities to install by themselves the smart meters. So this is not the addressable market for a smart meter. The addressable market is on the independent utilities, because on the contrary to the big ones, they don't have the installation capacity and they don't have the financial resources to do so. And who are the competitors, and how is the market on these independent utilities? So basically, you have some companies which are basically small independent players who are installing or can have the installing capacities, but they do not have the financial resources to invest on smart meters. So it's the utility company that needs to do so. And then you have other companies which are the financiers, which basically they have the financing power to invest in smart meters, but they lack in a great way the installation capacity of smart meters. The real only company that combines both the installation capacity and the financing capacity is a smart metering system. We'll explain now afterwards regarding the financing capacity, but regarding the installation capacity, the company has right now 500 engineers which can install smart meters, but they also have, which is very important, 2 academies which are forming every month new engineers, so that the number of or the installation capacity of the company is constantly increasing. Okay? Why? And why is this so important? Well, I mentioned before, the UK government has forced all utility companies to move from traditional meters to smart meters by 2020. Right now in the UK, we have around 55 million meters to be transferred to smart meters, of which by mid this year, mid-2019, 15 million had already been transferred to smart meters, but there is still around 38, 40 million meters which needs to be transformed from traditional to smart meters. Out of which, as we mentioned before, around 75% corresponds to big 6 utilities and 25% corresponds to independent. That's where smart meter is concentrating its efforts. One important thing to mention is that the independent players are gaining market share from the big 6 utilities. That means that the addressable market for smart meters is constantly increasing because of this swift and gaining market share from the small independent players. So right now, without considering this potential market increase, market share increase, we are talking about 11 million of smart meters to be installed in the coming years. Of these 11 million, the company has already signed contracts with 12 independent suppliers, and these 12 independent suppliers represent 6 million smart meters to be installed. And of these 6 million, they have already committed, signed contracts for 2 million, and potential another 4 million that could be installed in that period. So this is the market, and this is how it looks. Regarding the current portfolio of smart meters of the company, they currently have around 2 million smart meters, and there are 3 different kinds of meters in the company's portfolio right now. One is the domestic traditional portfolio, and these are the old-fashioned meters that need to be transformed to smart meters. Obviously, right now they have around 400,000 meters of traditional meters, which represents around 20 million annual recurring revenue. This is something that is going to disappear and to decline throughout time because all these traditional meters will be transferred and transformed in smart meters. Then we have what is called industrial and commercial meters, which is combined with the data. They are both the same. And these are meters which are addressed to factories and to commercial customers. And these are meters that work the same way as we have explained before. The only difference is that they are bigger and a bit more complex. So the numbers in terms of investment and also of monthly return that you get are much larger. The transition from traditional meters to smart meters, in this case, has already been completed. So the expected growth in the coming years is relatively small. Regarding the smart meters, however, as we explained before, the company has right now 850,000 meters installed, which represents 33 million of annual recurring revenue. But there is a huge opportunity to install another 4 million in the coming years. What has happened recently, and what's the reason why the share price of the company has collapsed recently? Well, there are two things important. One, that the regulator has decided to postpone the deadline to do the transition from 2020 to 2024. Does this change anything at all? I don't believe so. Why? Because as you remember, we said that there are still 38 million smart meters to be transformed. It was totally impossible to do that transition and to transform all these meters to smart meters by 2020. So even though the deadline was at 2020 until a few months ago, everybody knew that it was impossible to do the transition by that day. Now we have the 2024 deadline. It's a more reasonable deadline, and it can be done in this time. So no major change from that. The second one was that there was a technological change on the smart meters, a transition from a smart meter, what is called a SMETS 1 to a SMETS 2, which is basically a difference on how the data is transferred from the meter to the utility company. This change has created some problems with the old devices, which needs to also have the software change to transform, to being transformed to a SMETS 2. And also, it has created some problems because obviously you had to get all the inventory for the new meters and get rid of the inventory from the old meters. All that, what has created in a few quarters is that the pace at which the meters have been transformed into smart meters have significantly reduced because of this technological transition. What is the impact for monthly metering? Well, as I mentioned before, they have 500 engineers and they have an annual installation, monthly installation capacity of around 70,000 meters per month. During the quarters where we have had this technological change, what has happened is the actual installation of the company has gone down to around 30,000 meters per month. Obviously, when they have full capacity, they are capitalizing because that goes into the capex, into the investment. So all the costs of the engineers are capitalized and included in the investment of the smart meter. If you have either capacity on engineering business, then what happens? Obviously, that you cannot capitalize that, and that goes directly to your cost of sales. If you see the numbers of the asset installation segment unit, it has gone from 3.2 in the first half. It has gone from 3.2 million EBITDA to minus 5%, minus 5 million negative EBITDA. Okay, so this has created a temporary problem, a temporary reduction of the revenues and profits from this division. But we believe that the value and the importance is not in this division, but is on the portfolio of smart meters that the company is currently managing. Okay, so well, this is a summary of the investment thesis. I will jump this because of lack of time, but basically it's what we have mentioned before. The company has a market-leading position to capitalize in a huge opportunity that is currently going through until 2024. They are investing in a very attractive asset class with yields of 11 to 12%, which is inflation-linked, which is lasting for at least 25 years or more, and which is protected by a termination fee. The company has a strong balance sheet and has the financial resources to do the investment necessary for the 4 million opportunity new smart meters that will be installed, at least. Why is that? Because they raised equity 1.5 years ago. They raised 150 million pounds, and also they signed a revolving credit facility of 420 million pounds. So with both of those things, they have all the necessary resources to invest in the 4 million opportunity. And finally, very important for us, this is a company where we believe the management is very well aligned. The current CEO is one of the founders of the company with a 5% stake in the company, and the other co-founder, which is not in the management team right now, but which still maintains a 5% stake in the company. Finally, there is a friendly activist that has recently taken advantage of the recent de-rating of the company, has taken a 5+% percentage position in the company, and we believe that that's also a very good sign about the opportunity. Regarding the valuation, so if somebody looks to the company looking at enterprise value to EBITDA, well, it looks expensive. Basically, it's trading at around 4 times EBITDA, but we believe this is not the way to look to this valuation. The important thing to look at for us is to look at the annual recurring revenue the company is generating with the smart meters that it has currently installed. So currently, and we are talking about only the annual recurring revenue coming from the smart meters, not coming from the traditional meters that, as we mentioned before, will disappear in the coming years. So the company is currently generating 64 million of annual recurring revenue for more than 25 years, link protection and with termination fee, and has the opportunity to more than double that annual recurring revenue in the coming years because they have already signed the contracts with the utilities that needs by 2024 to change those meters to smart meters. That means that, and we are talking about very conservative assumptions. We are only taking the current installation capacity of 70,000 meters per month, which is the current capacity. As I mentioned before, they have 2 academies where they are training new engineers. So this installation capacity should increase significantly in the coming years. But taking only into account the current installation capacity, we believe that by December 2022, they will have 3 million of additional smart meters to install, which will allow them to increase their annual recurring revenue to at least 126 million pounds per year. So here's the evaluation and how we see things, taking into account the annual recurring revenue for the smart meters, and obviously we only need to subtract from that the taxes, and we value that at 17 times. What we believe, given the high quality of this annual recurring revenue, is fair. We are getting that currently with the current portfolio of smart meters which has been installed. The company is valued at £6 per share. The company was trading just 1.5 months ago at £3.5. It has re-rated a little bit, so now it's trading between 4.5 and 5, which still means that the company is trading at a discount to the value of the current portfolio. But what is more important is that we believe that once the company has installed the additional 4 million meters, the value of the company will increase significantly. So we are estimating a value in 3 years of £11 per share, which means that the internal rate of return is around 30% for the next 3-4 years. There's another question, another potential upside which we haven't mentioned, which is what will happen with the installation capacity of the company once this transformation from traditional to smart meters finished, which will be at the end of 2024. Well, the company is already working on that. And basically, they are working on the different areas, but one big opportunity for the company would be to start working on the installation of electrical charges for electrical vehicles. So as the electrical vehicle opportunity increases throughout the years, there will be a huge need to install electrical charges all around the country. And as the company has a huge engineering network capacity, there will be, or the company believes that could be a good opportunity to use that force to implement that installation. That's one example, but the company is working on other things that would increase significantly the value of the asset installation business. Some investment risks, there are always risks. Obviously, regulation is one of them. We have seen that with the delay from 2020 to 2024. There's a risk of increasing competition. When the deadline was in 2020, there was no time for competitors to react. Now there is a little bit more time, but we believe it's not so easy to generate and create this installation capacity that the company currently has. You need to form the engineers, and that needs time. So still, we believe it's not such a risk. Interest rate increase, well, that could be a risk, obviously, in the valuation of these kind of assets. If the interest rates increase significantly, there could be an impact on the valuation. However, we believe that in that scenario, we would be in a situation where inflation would start increasing significantly, and you need to remember, this is inflation-protected asset. So if interest rates goes up, but the inflation starts increasing, then we are relatively well protected for this. And finally, one last mention is the risk of the asset life. We mentioned the company is amortizing this in 25 years. We believe, and the company believes, that the real life of the asset is much longer, but if for whatever reason this is shortened, then there could be a risk on that. And finally, a summary on why we believe this is a good opportunity. So we believe this is a very good business, very attractive, well-protected, lot of visibility, no impact at all for economic cycles or for Brexit, whatever the result is. We believe the company has a strong balance sheet with all the financial resources to take the opportunity that is in front of it. The company is owners-occupied, with the management team having a significant stake in the company. And finally, we believe the company is currently trading a very attractive valuation with very attractive returns for the coming years. Thank you very much.
Thank you. I think we could maybe do one question shortly, or are there more questions? Or no questions?
Oh, yes.
One question.
Yeah.
I have some doubts about the lifetime of your equipment.
Okay.
You don't know what technology will be in 10 years. You have to try to install an app on a smartphone that's 5 years old. You don't know anything about how it will be connected to the network, about security you will need for network. If you know, for example, electronic ID cards are changed every year, solely for the reason of security, that they cannot guarantee the chip will be strong enough to guarantee security. So I have very much doubt about the lifetime you project. And is the customer obliged to stay with the same contracts for not the energy contract, but I suppose they pay a rental for the meter?
Yeah.
The government will not imply that you cannot change a contract in 25 years.
But I mean, you need to have a meter.
That's for sure. But but if in 5 years, in a couple of years, there's new technology. You mentioned electric cars. They need to be not only metered, but also powered on and powered off, depending on the peaks on the network. Mm-hmm. So that's new technology. That's smart grids. It's not there yet.
I mean, the thing is that this transformation from traditional meters to smart meters, as you have seen, has not been easy. It's a huge amount of resources that has been invested in doing this. So it's very difficult to do this kind of transformation every 5 years, changing 55 million smart meters. There can be technological changes, but the good thing about the smart meter versus the traditional meters is that you can do that remotely. Basically, it's a software thing.
Yeah,
So
that's easy, but not with technology of 15 or 20 years old. It's not that easy to do.
well, but we are talking about new technology, what is currently installed, and that can be changed.
Yeah.
You change your application on your phone, and the smart meter continues. I mean, a smart meter is not like a phone. It's not very complicated software.
If it's only metering, but then it's not. In Belgium, we connect the solar panels, giving back the energy that goes back to the engine network. That has to be measured. You have the smart homes coming more and more.
Well, it's a fair.
And the total approach of the case is built on the lifetime.
Yeah. Well, yes.
Because you have the lifetime of 25 years. You have the yield over the 25 years.
It's a fair doubt. What I'm saying is, it's not so easy to be changing smart meters, or it's not changing meters every 5 years. It's not so easy, and it's very expensive, and somebody has to pay for that. And traditional meters have been in place for 40, 50 years, and there has been no change, and there have been a lot of technological change. So we believe that there will be no change of meters every 5 years, because this is a huge investment, and it's very expensive. And we think that if you can change that remotely by upgrading the software, which again is relatively simple. We are talking about transferring data. We are not talking about a computer which is generating anything very sophisticated. So what's the incentive to invest again billions of pounds to change the whole network of smart meters? We believe there is no incentive to do that if you can remotely change the software. But I mean, that's a fair doubt that you have. So.
Thank you so much, Jose. Of course, for you also we have
Okay. Thank you very much.
token of appreciation.